Alright, hi friends. So in this video, I want to actually show you how to use liquidation maps to understand where the market might actually spike into for your easier understanding of price movement, price action, and this can also help you to determine what kind of ranges you are able to set. So in DeFi House, as you know, Robert, my colleague, a co-founder as well, he's basically mostly focused on the technical analysis based of charts, and he provides DeFi zones and ranges from the technical standpoint. And I myself, even though I am mostly using just experience through so many years, but my job is to explain different tools that you can use to add on your charts or to see and monitor that can help you understand the best possible range setup or market movement. So you already know things like historical volatility calculations. You know how to use the ranges using common sense, using a bit of a technical charts as well. And this is just another method for your own market intelligence. Okay, this is purely market intelligence based thing, because the majority of people, they will never even think about actually using these things this way. Okay, so please watch it, try to apply it on your own day-to-day basis, because this will help you read the market way more smoother and be more predictable. Okay, so first of all, I am using CoinGlass as the main place to see general liquidations happening in crypto. So you will go to CoinGlass liquidation, then you will choose the liquidation heat map mode, model 2. This is just the one I prefer. Well, if you use model 1, you have this kind of lines, a very specific strict ones. On module 2, you have a bit more like an areas, so to speak, and module 3 offers even different ones. In my opinion, model 2 works the best, so we will have that. Okay, then what you want to be doing is, first of all, right here, you want to select which centralized exchange data you are looking at. So in most cases, you will be using the biggest ones, either Binance or Bybit, right? These are the biggest centralized exchanges for perpetual futures trading, right? I mean, there is no point to use something like MEXC, for example, or HTX, because the volumes they generate are not as high, and you want to be looking at the highest possible exchange with the most data. So the most data, even though I hate Binance and centralized exchanges in general, but still Binance generates the most kind of volumes, so to speak. So Binance is a good thing to watch from this perspective. So now when you have on Binance, then you choose the time frame. For the day-to-day regular stuff, 24 hours is default, and that's good enough. That's what you want to be using. And now this gives you a pretty standard point of view on where you have the most liquidation orders waiting on the chart based on the current price action. Okay, what you want to be doing then is scaling a liquidity threshold is now at 1. You want to scale it towards 0.5, towards 0.55, and maybe even lower depending on your personal preference. But in this case, 0.55, it may actually show not too bad, but let's try to do maybe for free. I would say this is a bit too much. So in my opinion, about 0.5, yeah, it's pretty clear. So basically the deep yellow color, so to speak, it means that the most liquidity sits on these price points, on this area, so to speak. So if the price reaches this area or that area that is deeply yellow, it means that there are a lot of orders. Those orders can be anything that involves leverage, so liquidation leverage, so to speak, which means that people may actually have a long or short position on perpetual futures market, and their liquidation or stop losses are sitting within this area. Okay, so the market usually, especially the market makers, and especially on the biggest exchanges like Binance, Bybit, they tend to actually naturally push the market towards the liquidation prices, where the most liquidation is, basically to liquidate people, to liquidate retail and get them out of the market so the exchanges can profit, right? So these liquidation leverage areas are acting sort of like a magnet, okay? Like a magnet where a lot of money and liquidity volume is sitting, right? So seeing this can help you understand where the price might actually feel attracted to, and whether there are more liquidations happening from the upper side above the current price or below the current price, so you know where the strong resistance sits. And as you can see right now, within this area at the very edge of this deep yellow line, we have approximately 8 million, 10 million, $6 million dollars worth of liquidations sitting in this area, while somewhere right here at the bottom area of the strongest point, we have about 11.7 at 106 K per BTC, and something like 8.7 million at 108. So what you can do now is basically have this liquidation heat map open. Go to the chart on BTC. Make sure that you open the chart that represents the same perpetual futures contract. So for example, in this case, you would like to go to BTC USDT.P, which means perpetuals, and you want to find the same exchange that you've been actually looking for. So because we looked at Binance, you want to look at Binance as well from this perspective, perpetual futures contract from Binance. If you watch on CoinGlass from Bybit, for example, you want to choose Bybit, okay? So now we choose Binance, and as you can see, this is the empty chart, which is good enough for me. And now you want to be doing the following. First of all, you should have some sort of a tool to measure and to mark an area on your chart. It could be one of the multiple options available across a TradingView platform. This could be a simple rectangle tool, right? Like a rectangle. This could be also this one, right? Like that. So we have top and bottom, as you can see, like that. But the best one, in my opinion, is just a simple rectangle tool. So what you want to grab a rectangle tool, and then you want to place a basic random area on the chart. And now you want to click on the tool, click on the settings, go to coordinates, and here you can enter the actual price points of your zone. So now when you have this, you go back to the CoinGlass, and you want to be marking multiple areas. In this case, we have two main ones, so we will focus on those two. This one is also a pretty valid one, but it's pretty high above the current price. So we could mark it, but the most effective ones will be definitely these areas right here, because those are the most visible, closest to the current price. So then you want to be hinting and hovering right at the bottom edge of the area, which would give you the price of 108,346. So you 108,346, okay, like that. And the upper one, you want to be looking at the top of the range, pretty much, which is 109,115, which is 109,115. Click OK, and now you have this area marked on the chart. You can extend it a little bit, just like that, on a daily chart. Okay, then we want to add another one, just a random area. Double click coordinates. Now we want to mark the bottom one, so the upper will be 106,614. Okay, 106,614. And then the bottom edge 106,037, which is going to be 106,037, just like that. So this is the current price, okay, from that lower region. And then we have this one that is 109,885. This is pretty much not as a zone, as more like a specific price point, so we can mark this one as a line. So in this case it's going to be 109,885. So we can use the horizontal ray tool and just go ahead and mark it. Sorry, forgot. It's going to be 109,885, 109,885, just like that. Okay, so now you have these three zones, basically where most of the capital is sitting, and if price reaches this region and this region, we know that there are liquidations happening, right? So now you can scale this chart into a bit of a lower time frame, let's say 4 hourly, and you can see that even from before, this morning drop happened specifically to this area right here. As you can see, it was flushed right now, and now we have some liquidation areas here and here. If we look at the liquidation chart, we can clearly see that we have more liquidations happening when the price is higher, so to speak. We have region here, we have another one here, another one here and here, and we only have one major area of liquidations happening pretty much right here within this price point, so to speak, right? Meaning that we know by looking at this chart and our zones and looking at the actual price chart, we know one very simple thing, that we don't have a lot of orders below this region here. So we can expect the price to sustain this region and either manipulate the price between these two areas, and also you can expect a pretty frequent dips into this region, straight into this one, then into this one again, maybe into this one, etc., etc. Throughout the day, you want to be checking the liquidation map multiple times a day, at least 2 times a day, to see if there are any significant changes on the liquidation heat map. If there are, you just adjust your areas, so to speak. But generally, now when you have this on your chart, for the short-term perspective, this applies mostly to up to 2 days of price action, and then you want to be reviewing. Or if you want to mark liquidation prices from a bit of a higher time frame perspective, you can basically choose here, instead of 24 hours, you can do 48 or 3 days. Let's say you choose 3 days, then you will clearly see a bit of a areas that you have here, which is pretty similar to what we marked already. Then you have some here at 111, but still, now looking from a bit of a higher time frame perspective, you can clearly see that we don't have much of the orders below the current price, with just the major ones at 106 and a bit of below here. So we have this specifically here, and there is not much below, meaning that there is no point for the price to go significantly lower to reach those places, because we have way more liquidation orders and volumes, liquidity basically, sitting at the higher prices at 1 11, 112 almost. Within this region we have the most of liquidation, so we can expect the price to actually move towards this area and then be met with a massive resistance, because a lot of liquidations are here. So these areas now on a chart, this is from the lower time frame, but if we would modify this to accompany this area, then it would look a bit different on the chart. But because I made it for 24 hours, let's stick to that. So now, as you can see, we have this major wall of liquidation leverage sitting. So all of this liquidity is here, lots of stop loss orders, liquidation prices, liquidation orders, etc. sitting in this region. So this region, we can expect that the price can actually hit this area and be met with a lot of resistance. So when the market reaches towards here, a lot of liquidation will start to take place and will start happening, meaning that this area is hard to be taken out of, but it acts as a resistance and as a magnet. So now the price is really freezed between these two areas until the whole leverage, or maybe not the whole, but most of the leverage is cleared off, right? So now the price sitting in this area and this area is acting as a cleanup, basically as a vortex of orders. So the market maker job now, when they see this data, is to push the price towards these areas of massive liquidations and do their best to clear as much market as possible, right? To liquidate those orders, to achieve those prices, so the exchanges, etc., can make a profit, right? It's just a big areas of it's like a magnetism of the charts. The price is attracted towards one or another to clear out the market and to get all of those orders. It's a classical market manipulation, but I just wanted to show you that you can actually mark these areas on your chart and know where you can be expecting a lot of resistance. And for example, you can apply this knowledge as well to your general market sentiment analysis and market intelligence, because maybe you are preparing to deploy money into the pool expecting the price to go up, right? This could be from anything, any blue chip, ETH, Solana, SU, it doesn't matter, right? You might expect the price to go up, but you can see clearly that on Bitcoin itself, which is like the main thing that moves the whole market. If Bitcoin is up, everything is up, and if Bitcoin is down, everyone is down. You can clearly see that we have a lot of resistance near the current price, just slightly above. So you can actually expect the price to be kind of stuck at those areas due to the massive orders of liquidation. So deploying into the pool right now could not work out as great as waiting to see when you have less upside volumes, right? Because then you have a more clear path for the price to go up. On the other hand, you can clearly see that there is not a lot of liquidations, like it's not the significant amount from the lower perspective, meaning that most of the liquidations are above the current price. So this can also suggest that there is no point for the market makers, so to speak, to send the price so much lower than, in this case, this region, because there is not much volumes and leveraged positions and liquidation orders, stop losses sitting below this current area. So this can work out as a benefit, because this can give you a bit of additional confidence, so to speak, that the price may not actually break way below this area. It could spike a little bit like that below the area just for additional orders, but it shouldn't sustain itself way lower, okay? So even if the price hits these areas, you know that there is not a lot of liquidations way below the price, so there is no point for the market maker to do all this effort and push the price lower. So then you can expect a bounce back to the upside. So in this case, the area between the upper and the lower of this placement is about 3% from the lower time frame perspective. So this can help you now to set up the ranges. You can actually set the range from the upper limit and the lower limit like that, and just stay in here while the market is clearing out the positions. Even use leveraged LP entries for a short-term perspective, specifically between these areas, because you know that this is the magnets that the price should be attracted to and react from, so to speak. From the higher time frame perspective, if you wish to use this method for a bit of a longer term horizon, you can definitely do that. Just go here and change this to 48 hours, 3 days, or even weekly, etc. Right? You will see way broader price points. You can add those on the chart and then use it essentially to know that when the market is moving, you can clearly see where the market will be met with resistance, right? On both sides. And then you wanna, the most important thing to understand and not to forget is comparing whether you have more volume above the current price or below. If you have more orders, more leveraged stops and volume above the current price, there is a tendency for the price to go higher, then to reach those levels, and from those levels there will be a reaction. But if you have more liquidation leverage orders below the current price, then you can expect the price to be pushed down to reach those levels and liquidate those people, right? So usually here it means that most people that are now long market, long Bitcoin on Binance, within these areas there are most of their stop losses and liquidation limits. So the prices can tend to go down and liquidate them, but we can clearly see as well that we have a similar and even more orders from those that are net short right now. Those that are short on Bitcoin, we have a lot of leverage, millions of dollars of liquidations pending, so to speak, above the current price, and then even more as we go up. And there is not much as we go down. So the market can be spiky right now because we have two strong areas right now. So the market can be spiky here and here to clear out the market, to confuse the retail, and then eventually make the next move. What's going to be the next move is hard to predict, but using higher time frame liquidation analysis and heat maps, you can do your best to be as precise as possible without being a magical wizard, to actually go ahead and see whether you have more leverage above or below, and then determine whether the price can have a tendency to go up or down based on where market maker is the mostly interested in. So if there is 1 million below the price but 25 million above, they will have the interest to push the price higher to catch and liquidate those 25 million worth of orders rather than that 1 million, because it takes effort, it takes capital, it takes manipulation for the market maker to actually dump the price or to push the price. Pushing is always easier because then the retail comes back. Dumping the market is a bit more difficult, so to speak, because it requires a bit more planning, so to speak. But now, using the heat maps for liquidations, you can clearly see where most of the money and volume sits, at what prices on different time horizons, and you can plan accordingly whether to wait for the market push, whether the market is tend to show a bit of a push to the upside or downside, and within what price brackets the price might actually stay for a while while it's clearing out and confusing the retail, right? These tools are widely available for the whole public, but nobody is using them because they have no idea how to use them. They usually open liquidation map like this one and just see, okay, so we had liquidated some longs, some shorts, blah blah blah. They will compare this and that's it. This data does not suggest anything rather than people are getting liquidated, right? And the amounts. But those charts, liquidation heat maps, especially model 2 and 3, can suggest very specific price points where most of the orders are, and then you can act accordingly, right, on your own decisions, whether to wait before deployment or to deploy right away, whether the price can go higher and reach those levels or lower because there are more orders below. So hopefully this is going to be beneficial. This is one of the things I wanted to show you. And yeah, once again, thank you for watching. Wishing you a fantastic Monday and the rest of the week. And as always, I will see you on to the next one.